Everyone thinks they can time the real estate market, but almost nobody gets it right. And here's the thing, real estate runs in cycles, and yet every time the market shifts, people act like it's brand new, like we've never seen it before. But the thing is, we have. This is Don Campbell. I remember hearing Don speak at a real estate event years ago. He's Canada's top-selling real estate author and the former president of the Real Estate Investment Network, Canada's most trusted source for real estate investment education, research, and strategic analysis. They have members that have transacted over 37,000 properties, representing more than $5.3 billion in real estate. Yes, billion with a B. Don and his team laid out a strategy based on the actual real estate cycle, and it was like someone flipped a switch on for me. His book, this one, Secrets of the Canadian Real Estate Cycle, completely changed how I look at the market. And in this video, I'm gonna break down the cycles of the Canadian real estate, just like Don did in his book, the boom, the slump, and the recovery, and show you the hidden drivers between each stage. This isn't about media headlines, there's no hype here. This is just a timeless way to think about buying real estate. And here's the part that nobody talks about. We can actually figure out where we are in the cycle right now, not by guessing, but by looking at the right data points. And I'm going to show you how to spot the signs just like a strategic investor would. So whether you're an investor or someone trying to make sense of the market, let's break this down. If that sounds good, let's get into it right now. You only get one chance to buy or sell your next home. Let's get it right. Worth mentioning, my name is Darren, and I've been helping people just like you buy or sell real estate in the Surrey, White Rock, and surrounding communities since 2007. We meet people all the time from this very YouTube channel. So if this sounds like you and something that may help, feel free to book a time with me and my team in the description below. We'll help give you all the information to help you navigate your real estate plans with complete confidence and success. Okay, here's the thing. People have short memories in real estate. We act shocked every time the market shifts. We get fearful, homeowners panic, and would-be homebuyers, well, they celebrate, right? But if you zoom out, we've seen this all before, especially here in the Lower Mainland, over and over again. Just look at some of these headlines from decades ago. Real estate in Vancouver is unaffordable. Prices are up. What do we do? This has been happening in the Lower Mainland for decades and decades. And here's the problem. Here's what happens. Prices soar, everybody rushes in, bidding wars take over. Then the headlines flip. Interest rates go up, sales slow down a little bit, and suddenly it's pandemonium. But underneath all that noise, there's always been a pattern. For over 30 years in BC, the real estate market has followed the same core cycle. Boom, slump, recovery. The only thing that changes is how people react to it. And here's the kicker. Most people don't realize they're in the cycle until they're looking at the cycle through the rearview mirror. By the time the public catches on, the real opportunities are already gone. And that's the mistake that Don warns about in his book. If you wait until it's obvious, you're probably already too late. So what are these core cycles exactly? Well, let's break them down because once you see them, you'll start recognizing them everywhere. The first cycle is the boom cycle. This is where prices are climbing. The headlines are glowing about real estate. Open houses are packed, offers go in with zero conditions, and FOMO kicks in hard here. In this cycle, it feels like real estate is a sure thing, but by the time it feels safe to jump in, you may already be late in the boom. This is when emotion takes over. The next cycle is the slump cycle. This is where sales slow down. Headlines turn a little gloomy and buyers really hesitate to make moves. Sellers like to wait it out if they can, and the market here feels really uncertain. But here's the thing about the slump. The slump isn't always a crash. Oftentimes, it's a plateau. That just means fewer sales, slower movement, maybe some price drops. And this is where smart investors or those waiting to jump into the market start paying attention. The third and final part of this entire cycle is the recovery phase. This is a very quiet phase. No one's hyping the market, but behind the scenes, key indicators start improving. This is things like where vacancy rates start to tighten, rents climb, inventory shrinks, and the numbers start shifting even when the headlines haven't caught up yet. This is when strategic buyers make moves, not because it feels like the right time, but because the data shows it. And here's what really stuck with me from Don's book. Think of the real estate cycle a little bit like a dial that only spins one way. It doesn't reset and it doesn't go in reverse. It just keeps turning, boom to slump to recovery again and again and again. And every time it turns, most people act surprised. But if you're watching closely, the pattern is always there. So if the cycle keeps spinning like a dial, how do you know where you are on it? Well, that's where the TRAS method comes in. The TRAS method is a real estate investment strategy developed by Kieran Trask, and it's one of the smartest ways to make decisions based on where the market actually is, not what the media is saying. It starts with understanding that every real estate market moves through predictable phases. The actual phases that we talked about earlier: recovery, boom, and there's a little bit of oversupply in there, and then of course the slump. Now, each phase comes with its own signs: pricing trends, vacancy rates, investor activity, and overall market confidence. But here's the difference. The TRAS method uses real indicators to pinpoint which stage your market is in, and then recommends what Trask called cyclically sensible actions. Buy during the recovery, sell during the boom, avoid panic selling in a slump. It's about playing the long game with strategy, not reacting out of fear. Adding this method to Don's book was an absolute game changer because it gives you a framework based on what's really happening, not what people feel is happening. So how does this all work? Well, first is demographic drivers. These are things like population growth, net migration, employment, vacancy rate, and new housing starts. If more people are moving in than moving out and there aren't enough homes, that's a long-term signal of demand. The second driver is financial drivers. So things like rental rates, income levels, access to financing, and overall return on investments. And I want to highlight something and talk a little bit about affordability, because this is something that I think a lot of people don't understand. Affordability doesn't mean whether you can afford to buy your dream home. Affordability means, in this context, that the general population can participate in the market. Think of it this way: someone with two incomes, good credit, and home equity is playing a very different game than a first-time buyer scraping together a down payment. When affordability slips for the majority, demand starts to shift. The third driver is emotional drivers, and oftentimes these are the toughest ones to measure. These are things like sales volume, days on market, media sentiment, and buyer confidence. It's the mood of the market, so to speak. And because it lags behind everything else, it's usually the last thing to shift, which is why most people miss the signs early on. Once you learn how to read all three of these, demographic, financial, and emotional, you can get a much clearer picture of where the market's at. It's not perfect, but it's way more reliable than waiting for someone on the news to tell you it's safe to buy again. Now, here's one of the biggest mistakes people make when trying to time the market. They let their emotions drive the bus. They buy when it feels safe. They sell when it feels scary. They wait when things are uncertain and often miss the best opportunities. But here's what strategic investors do, or at least people trying to time the market strategically. This is what they do differently. And it's something that anyone can do, whether you're building a portfolio or just simply buying your first home. They make decisions based on goals, not headlines. Once you understand these cycles and how to use the TRAS method, you don't have to chase the perfect moment. You just need to ask, what makes sense for my goals right now? Maybe your goal is something like long-term cash flow, or maybe it's getting into a neighborhood that's just starting to recover. Maybe it's buying while others are sitting on the sidelines and the fundamentals still look strong. Whatever the goal might be, your strategy should flex with the market, but your decisions should never be driven with fear, because people who act out of fear, well, they usually regret it. But people who act out of strategy, they tend to sleep better at night. So here's the bottom line. You do not need a crystal ball to understand real estate. You just need to zoom out and pay attention to the right signals. Boom, slump, recovery. Where are we in these cycles? These aren't just theory, they're cycles we've seen play out over and over in real cities across decades. And once you start spotting the drivers, demographic, financial, and emotional, you'll start seeing the market with a lot more clarity and a lot less stress. If you want to stay ahead of the curve with local market tips, updates, and strategies just like this, make sure to subscribe to this channel. We're here to help you make smarter real estate decisions in BC. And if you're looking to get more ammo to make better money moves, I've got you covered, because most homeowners, well, they make the wrong call when it comes to financing. Should you go fixed or should you go variable when you get a mortgage? Should you lock it in? Should you ride it out? I know it's all very, very confusing, especially in the current rate environment we're dealing with towards the end of 2025. It's confusing, and the wrong choice can cost you thousands. So my next video breaks down everything in a simple, straightforward way so you can avoid making the wrong bet with your mortgage. That one's coming up right now, so stick around and I'll see you over there. This video today is all about the difference between getting a fixed rate mortgage versus a variable rate mortgage. And if you are leaning towards the security and the assurance of what comes along with having a fixed rate mortgage, you want to really consider the two bets that you're making when you decide to go that route.